Good morning, folks. I hope you are doing well, and I hope you had a great weekend. I have three pairs on watch today. Those are Euro dollar, Aussie dollar, and Euro Aussie. Just to say that I am in a trade on Euro Aussie. Literally, just as I woke up, the entry was ready, so I shall break that down for you when we get there. I actually posted in a Instagram story last night about how even though it's a bank holiday, we need to kind of we need to kind of stay on the ball because you never know when an entry is going to shape up. And sure enough, an entry did shape up this morning. So that is my fourth trade of this month. I'm marginally in profit. I say marginally, it's like 0.09%. So I'm not really counting that as profit at the minute. But January, February, and March were all profitable for me, and we're kind of, as I say, kind of floating around sort of break even for this month. So we'll see what happens. But regardless, euro dollar, if we just zoom out. So what I'm looking for potential shorts on this pair today, from this pair rather. Okay, so you can see that we've had a lot of momentum to the upside. Okay, if I'm just zooming out to the monthly. What we can see, however, is that we have tapped into this area of value. Now, why is this area of value significant here? This area of value is significant here because there was a lot of volume built here, okay? A lot of volume built here by way of this expanding pattern, and we had a big sell-off. So from this area where volume was built and exchanged last time around, there was a big sell-off with pullbacks that never exceeded 50% of the previous impulse, okay, from that area. Okay, so that tells me that this is potentially a valuable area where we could potentially be looking to sell. Okay, and the other clue is that to some extent we left a bit of a gap here. Okay, so we kind of gapped to the area. Okay, and if you really want to connect things up, like trend lines, for example, you can see that we also have that kind of 1, 2, 3 structure leading into that as well. Okay, the other clue that this is a valuable area, okay, is the fact that look, we near missed to it. See this wick here before I even drill down. So I like it when before I've even drilled down, I can see a lot of the story on the on the super high time frames. So we gapped to this area. When that happens, as I said, people are selling here. Where are they likely to have their stops? If you sold here, you're likely to have your stops above here. If you're trading support and resistance, for example, we get to that area. I like the fact, just to touch on it, that we've scooped to that area. Okay, so we've kind of scooped back up. I can see that even on the daily. That's often an indication that we may be going short. Okay, the internet's just frozen up for a second. Bear with me. If you wonder why I'm dressed up the way I am, it's because it is absolutely freezing here in Scotland at the minute. It's been 17 months worth of just really, really cold weather, so that's why I'm dressed up the way I am. Hopefully it'll warm up at some point. There we go, we've got the internet back. The other clue that we could be seeing a move to the downside. What's happening there? The other clue, there's a couple of clues here. So we also have if we just use the trend line tool, we have a 1, 2, 3 last leg. So we have this 1, 2, 3. When you see these moves, the third wave is often the completion of a move. Now that doesn't necessarily mean it's going to go short. The pair is going to go short. But if something is completed, then either we're looking for a further correction sideways before we push higher, or we're looking for that would imply a break back into the structure. Okay, and if we just measure this and we assume that what leg 3 is of a similar length of leg 1, so we have the 1, 2, and then 3. You can see if we do that and we also measure it from the break of this correction, that takes us up to exactly where we've stalled. Okay, the other clue is the fact that we left a gap here. Okay, so we left a gap here to this sharp area, okay, which was the retest at the back end of the previous high. Okay, that implies a potential move to the downside. Okay, so as I said, if people are buying here, many of them might have their stops below here. So you end up with a zone of orders, okay? You can see we're getting a little bit of momentum here. So what I'm going to be looking for from this pair is the following. I'm looking for a break back down. If we break below that area of value that I showed you on the higher time frames and back below this area of interest as I've got it marked, then that, in my opinion, would negate the prospect of this actually being, something like that to push higher. Because, as I said, just because this is a potential completion of a move because of this 1, 2, 3, doesn't necessarily mean just because a move is completed that we're going to go short from there. Okay, so we still need to wait for the right confluences. So what I'll be waiting for is a push back below the area of interest, followed by correction, and then that has negated what I've literally just drawn on the chart, in my experience. And then I'll be looking to for the push down and the correction afterwards, whichever correction we get, as illustrated or annotated to the right there. And then I'll be able to manage this down to here. I'm not concerned about this so much as being a potential area where we, as a take profit area, because it's not sharp. Okay, so this, look at what happened last time around. We did move up, but it took a long time. That's telling me that this is not likely where price will respond from. It's telling me that this is likely where we'll respond from, because this is a sharper move and it's also the 90% area of this. So if we were to measure the range, so from there to there, it mathematically lines up. So what I would do in this instance is I would actually set the take profit at this blue line. Okay, I always do it whichever ones comes earliest, the blue line instead of the sharp move, but I'll be essentially targeting that low, and we would have a decent risk to reward, as you can see, down to that area. So that would be just kind of a first inflection point to me, and we'll see what happens. So that is euro dollar. And as I said, I'm only kind of targeting here as well, because on the higher degree, I think I might have mentioned this, on the higher degree, this could be a move down to here. Perhaps we get, we get a gap there, we come back up, we then tap into it, and then we push higher, and then this whole thing was just a bull structure to continue this phase 1, phase 2, phase 3. Okay, so that's why I'm not targeting super long moves down to these areas. Okay. So similar deal really with Aussie dollar. One of the reasons this is lower down on the list is because you can see that we have broken below. So we've broken below. We left a gap here to this low, and we have broke below, washed out all the orders, and moved up to the upside with a significant amount of momentum. Okay. So potentially this could be a move a lot higher. Again, though, it doesn't mean to say we can't capitalize on a shorter term move to the upside. You can see we have the area of value. I do like the fact that this is slightly more standout than the one on euro dollar. I do like the fact that we had a sharp move from there. Okay, I like the fact that we've got a couple of gaps to the area, implying that when some people sell this, they put their stops above here. We also have a reversal structure, okay, which taps into this area but doesn't commit. I said to you, remember in my previous video, I said this 4-hour candle here was the clue. This was the clue that this reversal structure from here was not going to commit, and that actually the liquidity was sat just above, because that was the origin of all of this, and it's also where we had a sharp sell-off last time around. Well, that's exactly what's happened. You also have an element of that 1, 2, 3, where the waves, the 1 and the 3, are of a similar length. You can see here where sellers got trapped in again. So what I'll be looking for from this pair is I'm looking for the same thing, really, exactly the same thing. I also like that we actually left a bit of a gap here. So there was a bit of a sharp move here, but there was a gap. Okay. I like the fact that we have a gap here to that low. Just analyzing a lot of this on the fly. What I'm looking for is I'm looking for a break because of that the higher time frame direction, which I just showed you. I don't want to get trapped into anything kind of, up here, just below here, because this could still be retesting the back end of all of this volume here. We get tagged in, we get tagged out, price does something like that, it comes back down, and then this whole thing becomes a bull structure to push higher. Generally speaking, we wouldn't, see this much volume off of the back of an already voluminous structure. I do like that word. But nevertheless, rather than getting trapped into that, if we get the push down back below the area of interest, so this white line here, then I'll be looking to get short either within the correction or on the break. same rules as with the euro dollar. And then by that point, I don't think this would hold much weight, because if we've got something that deliberate, below here, correction afterwards, it's not likely not going to, with that much momentum, it's likely not going to stop here. So that would just be a kind of first inflection point, which I'm not really bothered about. We have 2.5% to that low, 3% to the low of that structure. And then because my minimum when it comes to take profits is 5%, what I would do is I'd measure the range from there to this sharp move. The sharpness implies there might be liquidity there. And then what have we got down to there? There we go, we've got the minimum, we've got 5.77. So that would be where I would set the take profit. Again, being mindful of that higher time frame potential, super higher time frame direction. So that is Aussie dollar. So what have we got here? We've got, there we go, I'll show you. So as I said, I'm in a trade on this one. The higher time frame, the reason this is last on my list is because the higher time frame is not great, okay? The higher time frame is not great. You can see so what have we got? We've got that wick up there, okay? And we've broken out of all of this. So potentially we've broken out of a lot of volume here, okay? And we've not really responded from anything of significance. However, when I drill down to the 4 hour, you can see the 4 hour is a very deliberate time frame. We may be just seeing a shorter term move on this, okay? So we have all of this volume. Let me just measure something on the fly. We have all of this. We measure that, and we assume that if this is a phase 1, phase 2, phase 3, that would take us up to this kind of area. And if we measured it from the break, that would actually take us up to that wick there. So this could be a shorter term move. Okay. As we drill down, things get clearer. I do like the fact you'll see this a little bit more clearly on the 4 hour chart. When I say things like that, you'll see it more clearly on the 4 hour chart. Already, we're having to go down the time frames to see certain things, which obviously is a slight negative in itself. But there is a consolidation here which we've left gaps to, okay? And you'll see there's a gap here to here, there's a gap here to here. I do like that. I'm mindful of the fact that these are actually below here, so they're potentially less relevant. However, once we zoom in, you can start to see that we also have gaps here. I like the fact that, so I'm looking to get short on this. We left a gap to here, gap to here. There's a gap to hit this consolidation here. So there's potentially a zone of orders, right? And my thinking was that if we respond from the area of value here, which you'll see on the 1 hour chart, and we take those out and we respond with the correct rejection candle, it's likely that price is going to gravitate down towards this zone of orders here, okay? And if we just drill down to the 1 hour chart, you can see if we just analyze this, this is where our edge as Falcon traders kind of comes in. We have, so we break above here. So we have this consolidation here. We tap above, take out all the orders. Price comes down. It leaves a footprint. Okay, we scoot back up to the area. You've even got an element of a reversal structure there. You've got the 1, 2, 3. We tap into that area, push to the downside. Okay, we get a little mini head and shoulders pattern there. Let's get that off a minute. We get all of this. We get this consolidation here. Price breaks the low, and it does so impulsively, and it leaves a footprint. Okay, we get a bit of a sharp move there. Okay, and the clue that the volume, this was the area of value where the volume is because we near missed to it. Okay, we near missed to that area. We near missed to it again. So as people are selling this, where are they likely to have their stops? Just above here. As people start selling here, where are they likely to have their stops? Just above here. We tap into the area, likely wash out all the stops that were sat there. And you can see we're moving to the downside. And if you really want to analyze this, you kind of have that element of the 1, 2, 3 there as well. The 1, 2, 3, where we have a middle section here. Okay. So what I did here is I took this as a 4 hour entry. I'm just checking the time, 14 minutes. We've got 6 minutes left. So what I did is, so my rules for this is a 4 hour structure. Okay. So I asked myself, what's the highest time frame that I can see the structure on? I can't see the structure on the daily, but I can see the component parts. I can see the highs and lows on the 4 hour chart. So therefore, this is a 4 hour structure. What are my entry requirements for the 4 hour chart? My entry requirements for the 4 hour chart are as illustrated. Okay, corrective tap into area of value where we got there correctively. Okay, 4-hour risk entry or 2 1-hour rejections, or I'm looking for the push down on the flag. So we got the 4-hour risk entry, because if we just zoom out, okay, that is it's kind of a bit of a doji, but it's got a lot less wick below it than it does above. So this is a washout candle. Okay, so this is a washout candle. So what I did is I did the following. I put my entry. So I traded this on the 4-hour chart. I put my entry just a few pips below the body, the close of the candle, the body. And then what I personally do is I measure from, so let's just go back actually. So I measure from, I get the Fibonacci tool and I measure from the area of value, and I measure to the top of the wick. And then I put my stop loss at 50%. So 50% of the range from the area of value to the top of the wick. Okay, you can see that there. Why do I do that? You might think, well, the stop loss is an invalidation zone. Okay, so your stop loss should go where the trade is invalidated. Now, if price has left gaps to this area of value and it's washed them out and then come back down, it's not really relevant for me to have my stop loss above the wick. Okay, because if we do cut after something this deliberate, if we do come back up and back above the area of value and start moving back up, to the within the wick, that it's likely, what we say, it's likely not the trade we think it is, and that it's likely forming. If it does that, starts coming up to this area, it's likely not the trade we think it is. So therefore, the thesis has been invalidated. So therefore, with that in mind, all you're doing by having your stop loss above the wick is compromising your risk to reward and essentially giving yourself twice as less, as you can see here, twice the, twice. What am I trying to say? You're dividing your profit potential by 2, kind of thing, because you're increasing your stop loss by 2. So you can see here I've been triggered in. What I'm going to do is I'm managing this on the hour. Okay, so I'm going to be looking at this on the hour. We have down to this area. I've set a take profit at 90% of the range. So what I did is I measured from the range. Just going to do this crudely because we're running out of time. I measured that sharp move there. Okay, I figured that these lows are potentially less relevant because they're more below this area of value on the left. I set a take profit at 90% of the range from here to that sharp move, and what I'm going to do is I'm going to manage this on the 1-hour chart. Okay, I'm going to check this at 5 minutes to the hour just to see how the land lies. But as you can see there, we're kind of in profit marginally at the minute. But if I manage to make a video tomorrow, I do want to make more of these, then I will let you know how this has gone. But this is my new time frame usage. This time frame usage, just to touch on it, in combination with all the other confluence factors, is the tweak that has sent me from doing kind of the break-even dance to consistency. So it's been very important in my trading. And when I look back through all my documentation, I realized that had I implemented this time frame usage, this entry criteria according to the correct time frame usage, had I done that in 2021, I would have been profitable several years ago. So it's a massive tweak for me, and I encourage all of you watching to at least consider the same time frame usage if you're in Falcon. I'm telling you, if you get the other factors on point, this time frame usage will be the kind of thing which tips the scales in your favor, as it were. Anyway, that is what I'm looking for. That is the trade. We should see how this plays out. If you're wondering why, just to touch on it, if you're watching outside of TradingView, if you're wondering outside of Falcon, if you're wondering why the little circle hasn't appeared next to the pair like it used to when I was in the trade, that's because I haven't traded this through TradingView. I've traded it through my funded account, my assessment account within the Falcon community. So it's been traded through a broker, which you cannot sync up to TradingView. So that's why it's not on here. I have to do that through my broker separately. But anyway, folks, I hope you've enjoyed this video. I shall bid you a great day, and I'll speak to you again soon.